by Nick Sargen, Chief Investment Officer at Fort Washington Investment Advisors, where he helps oversee about $40 billion in assets. He joins us this morning from Cincinnati, Ohio. Good to have you back on the program once again, Nick. So what about this deal, shall we call it, in Greece? Because it looks like the Greeks have agreed amongst themselves. They're still waiting for approval from the EU, but you don't see any chance of them not giving them the bailout funds, right?
Provided, I would say, Susan, that this is the closest can we finally put this issue to bed after 2 years. And I'd say we're probably looking in as good a shape as we've been. As you indicated, the Greek leaders have basically said to the Troika, okay, we'll meet your demands. But as you were indicating, the European leaders are saying, we want to see it in print. We can't just go off your word.
Well, I should also point out to you, Nick, that some headlines coming through from the Greek side. We just heard from the Greek finance minister, Evangelos Venizelos, saying that his country must decide if it will remain in the euro or not, and that decision must be made on February the 15th ahead of this Euro finance chiefs meeting. What is he saying? Is he saying that Greece has a choice of whether or not it wants to stay in the eurozone?
I think what he's basically saying is we know that the Greeks are going to have to take tough decisions. And what is at stake, I think what he's saying is he's raising the ante for those who say, well, I think we've already done enough. And he's saying, no, no, no. If we don't agree to this, we could wind up being forced out of the Eurozone, and it would be far worse. So I think he's using it as leverage to come on, let's sign on for this package.
All right. So would you say that this Greek deal is pretty much behind us? We're very close to the finish line.
I think we're getting very, very close. The only hesitancy I have is I would have said in October I thought we were there, and then the Greek President Papandreou then pulled the rug out of everybody. So it's never over till it's over, Susan. But I do believe this time that we will get resolution.
Okay. Nick, what are you doing on the markets? Some divergence, I guess, in terms of whether or not you buy into Treasuries these days or you buy into equities. We know that Gross has been upping his Treasury holdings the most in many years at PIMCO. But what about the likes of, say, Warren Buffett? Overnight he was saying that it's actually interesting or dangerous in terms of assets to own Treasuries or bonds right now, considering the low interest rate environment. And, of course, Larry Fink on our program just about 2 days ago saying go 100% in equities.
Yeah, I think, I'm sympathetic to what they're both saying, that if you said over the next few years where are interest rates going to be headed, and assuming there's a continued recovery, the answer is up, not down. So returns on fixed income could be very low. They could even be negative. And I do believe if the economy is doing better and we're starting to hire people, the corporate profit story isn't going to be as strong as it was for the past few years, but I think it'll be decent. So I do favor stocks over bonds. To go 100%, I think, is going too far, because what if they're, I'll give you an example. What would you say if all of a sudden there was oil supply disruption in the Middle East? Everybody do a major reassessment of equities. So you can't go 100%.
Okay. Well, Nick, given that you think we're close to the finish line for Greece, you can't go 100% in equities, but it looks like the good place to be right now. What sort of returns do you think we'll see in 2012?
We're off to a great start, as you know, one of the best. I had originally thought, Susan, maybe on the stock market I was being cautious, maybe 7–8%. My hunch is, given the information I see now, I think double-digit gains are certainly a possibility. I don't want to get too carried away, but between 10 to 15% I think is doable.
All right, so that's pretty impressive there, 15% gains. Quickly, Nick, what do I get into to get 15%?
I think right now there's two types of strategies. The winning strategy last year was go into dividend-paying stocks, but that, Susan, was a defensive play. I think if you're looking for value, there are a lot of companies that have very cheap valuations for more value stocks. They did very poorly last year because people wanted safety. I think that's the area that's likely to outperform this year.
All right, Nick, good talking to you as always. Have a great weekend.